The future of markets begins here, where trust meets technology. From settlement efficiency to digital innovation. From traditional services to AI. Shaping the new era of post-trade. In Eurasia's financial crossroads, CSDs unite to build a new landscape of industry. Ideas, innovation, integrity, collaboration. The forces guiding tomorrow's financial world. World Forum of Central Securities Depositories, 2025. Navigating the future together.
Ladies and gentlemen, welcome to the World Forum of Central Securities Depositories. It's a pleasure to have you all here as we explore this year's theme, Evolving Landscape of CSDs, Navigating Challenges, Opportunities, and the Future of Post-Trade Infrastructures. To officially open the forum, I'm honored to invite the chairman of WFC, Mr. Yedil Medeu, to deliver the welcome speech. Mr. Medeu, the floor is yours.
Distinguished colleagues and friends, welcome to Almaty. Welcome to the WFC 2025. It is my privilege to speak in two capacities, as the host of this event, and now already as a former chair of WFC board. I would like to use this opportunity to congratulate Mr. Ekrem Arikan as the new chair of WFC board. On behalf of Kazakhstan Central Securities Depository team, thank you all for being here. As you remember, at WFC 2023 in Prague, we discussed challenges rapidly moving from horizon to dashboards, returning of black swans, geopolitical turbulence, and regionalization, an accelerating technology cycle from DLT to AI, and growing sustainability demands. Today, many of these risks have materialized. We operate in highly uncertainty, compressed settlement cycles, strict expectation for cyber resilience, and re-examination of institutional role in new digital environment. Yet the key takeaway is not about risks, it is about people and infrastructure. Our CSD community has shown remarkable resilience. We ensured settlement finality and continuity. We kept markets together and connected and strengthened our recovery playbooks. From my personal point of view, the engine of this resilience, it is our regional associations, practical platforms for collective support, knowledge sharing, and rapid coordination. This forum is a joint project of all associations, proving that cooperation is not a slogan, but a working method. Allow me to anchor this point with the example of KCSD, not as a self-promotion, but as evidence that cooperation between CSDs must extend beyond conference halls. It has concrete applications. Our response in KCSD to geopolitical turbulence and fragmentation has been to build a regional financial depository infrastructure, anchored in independent, direct CSD to CSD links with countries and financial centers. This is not a slogan, it is a practical approach that strengthens resilience, accelerates settlements, and broadens investor access. In recent years, we have systematically expanding our regional connectivity. In 2023, we established a correspondent relationships with BNY, opening new routes for our investors and improving cross-border service quality. In 2024, we connected with the Central Security Depository of Armenia, reinforcing the East-West corridor of regional integration. This year, here at this forum, we are signing bilateral agreements on depository links with Turkish MKK and with Azerbaijani CSD. By the end of this year, we also will sign agreement with the Tajik CSD. In parallel, in 2025, we are planning to finish building custodian channels with the Middle East via First Abu Dhabi Bank and with Raiffeisen Bank. Next year, we are planning to expand toward East, Southeast, and South Asia. What does this deliver in practice? 3 tangible outcomes. First, reduced friction in settlement and corporate action through direct infrastructure to infrastructure channels. Secondly, liquidity diversification, enabling investors in one region to access instrument in another without unnecessary intermediaries. Third, resilience, because alternative routes reduce vulnerability to local disruptions or regulatory shocks. In the end, the winner is the investor, the issuer, and the supervisor, because the winner is trust. There is also a demonstration effect. At KCSD, we aim to show that CSDs can collaborate systematically through shared standards, API links, harmonized infrastructure, KYC and AML procedures, and unified corporate action catalogs. Each new link is not only additional access, actually it is a template that can be scaled to other market pairs. These are the building blocks of the global interoperability we all call for. Over the next 2 days, we will discuss how accelerated settlement can coexist with reliability and liquidity management, how data become a strategic asset, how to build interoperability without compromising cybersecurity, and how to implement DLT and AI responsibly, while preserving market trust and finality. Kazakhstan and the Central Asia are a fitting venue for this discussion. At the crossroads of the region, we can bridge between them, not only geographically, but infrastructure-wise. Colleagues, this forum is not only the place of ideas, it is a place for decisions. Let us use it so that 2 years from now, we can demonstrate a measurable progress, faster, safer, more connected. KCSD, for its part, will continue to widen its network, share lessons, and support joint experiments, because this is how the new normal of post-trade is built. My gratitude goes to our 5 regional CSD associations. Their coordination, commitment, and day-to-day work have made this forum possible. This is why I can say with confidence, this is the World Forum of CSD, organized by all associations together. In other words, this forum is genuinely inclusive and diversified, with every region of the world represented here. We also thank our partners and sponsors, Freedom Broker, Kazakhstan Stock Exchange, Montran, CMA, Thomas Murray, Vermiculus, Turkish MKK, NASDAQ, and Clearstream, whose support enabled us to deliver this forum at scale and quality. And my heartfelt thanks to the KCSD team for their tremendous work in organizing this event, from content and logistics to partnership and communications. Thank you and welcome to the WFC. I wish us all a productive forum. And now it is my honor to introduce our next speaker. Please welcome the chairman of the Kazakhstan Stock Exchange and the former chairman of Kazakhstan Central Securities Depository, Mr. Adil Muhamedjanov. Chairman, the floor is yours. Thank you.
Good morning, dear ladies and gentlemen, distinguished guests. It's my great pleasure to welcome you to this special event, WFC 2025, here in Almaty, organized by the Kazakhstan Central Securities Depository. We're deeply honored to host such distinguished gathering here in Almaty, united by your commitment to strengthen global capital markets and advancing post-trade infrastructure. Your institution, Central Securities Depository, stands at the very core of the market infrastructure. Around the world, you ensure safety, transparency, efficiency, and the trust that investors, issuers, governments place in capital markets depends directly on your resilience, transparency, and of course your leadership. And that's why I believe this forum is so important. It's a place to exchange best practices and place to address the most pressing issues of our time, such as modernizing the infrastructure in the era of rapid technological change, to adopt new tools like artificial intelligence, DLT, also trying to preserve financial stability, to advancing global interoperability without losing local strength. Also these challenges that you as a leader of CSD community can answer, and I believe the world is watching closely on you. Hosting this event in Kazakhstan is especially meaningful for us. Our country, situated as a bridge between Europe and Asia, has making significant strides in improving our capital markets. The Kazakhstan Central Securities Depository, together with the Kazakhstan Stock Exchange, has built resilient, internationally aligned ecosystem, and recent years have seen growing investor participation, steady technological upgrade, and absolutely stronger governance. By welcoming you here in Almaty, we're very proud to showcase our commitment to becoming a trusted regional hub, and of course to learning from you and your collective expertise as we continue our own way, our journey of transformation. The theme of this conference, Evolving Landscape of CSD, reflects the reality of world that you as a CSD trying to shape. We look forward from hearing from you how your institution are navigating these challenges, because it's very important for us to see and try to implement all this experience, expertise, and innovations here in Kazakhstan. On behalf of Kazakhstan Stock Exchange, let me extend my deepest appreciation to WFC for choosing Almaty as a host city. I also thank our partners, speakers, who contributed to making this event possible. But above all, I thank you all, participants, speakers, the leaders of the world's Central Securities Depository, for traveling here, for sharing your insights, for shaping the agenda, the questions that I believe will influence the future of capital market globally. Once again, welcome to the Kazakhstan, welcome to Almaty, welcome to WFC 2025, and enjoy our conference. Thank you, colleagues.
Mr. Muhammadjanov, thank you so much. Dear forum participants, the plenary session on evolving role of CSDs in transforming the global financial market landscape is open. This panel will explore how CSDs are redefining their position within the financial market infrastructure ecosystem, moving beyond core post-trade services such as safekeeping, settlement, and corporate actions processing, towards value-added roles including data services, digital asset custody, and direct support of capital market development initiatives. And we invite the moderator of the meeting, Chief Commercial Officer, the Value Exchange, Mr. Martin Lawrence, and all of the panelists to the stage.
It's a privilege to be here today. It's a privilege to be given the responsibility of moderating the opening panel of the WFC in Almaty, Kazakhstan. And for those of you who were able to join the welcome reception last night, we all saw that it's a country that's steeped in an amazing history and culture. My name is Martin Lawrence. I represent the Value Exchange. We are a market research firm that specializes in transformation that's happening across the capital markets, primarily across post-trade. And as we're going to discuss, there is a lot of transformation happening across post-trade at the moment. So as you know, the title of this discussion is The Evolving Role of CSDs in Transforming the Global Financial Market Landscape. To be able to have that discussion today, I'm delighted to be joined on stage by a very esteemed panel representing all of the regional CSD associations. To my left, Mr. Yedil Medeu, now former chairman of the WFC. Then we have Badiuddin Akber, chairman of the ACG, and Bruce Butterill, who is executive director at ACSDA. And then we have Ekrem, Arikan, the new chairman of the WFC, but also chairman of the AECSD. And then we have Mark Jem, who is chairman at ACSDA. And then lastly, at the end, we have Abdulla Jaffar Abdin, president of AMEDA. Before I get into the questions, firstly, just a reminder that if you have any questions you'd like to ask, please do scan the QR code. I will start to review them coming in on the iPad as we see them. But I also just wanted to give a bit of a preface to what we're discussing today. As I mentioned, we're a research firm. We have recently done a piece of research which has hopefully been seen by some of you, which we did in partnership with Citi, on the evolution of the security services world. And I wanted to just touch on a few of the insights that came out from that, because I think they're a good insight into some of the things that is happening across security services, across post-trade, and some of the things that are impacting CSDs and all of your participants. The first one is that there's a huge amount of transformation when it comes to platform changes. FMI platforms that support 40% of the world's market capitalization are currently undergoing significant change. 40%. So it's a really significant number. And if we consider all of that platform change for that significant size of market capitalization, we need to do all that while bearing in mind the need for stability, the need for resilience, but also, allowing for the changing demand of our client bases. The second statistic I wanted to share is 76% of firms that responded to our survey are currently working on T+1 project activity. Now, I'm sure T+1 is something that will come up fairly regularly over the next couple of days, but what's really important there is that of that 76%, a lot of people are still working on change related to T+1 for North America. So we think about North America T+1 as being in the rearview mirror, but it's not. It's still driving a lot of change for people. And now that's expanding. We obviously have the UK, we have Europe, we have some other markets that are moving to T+1, and the whole of Asia is now thinking about how they're going to do that. But also, as we think about platform change, as we think about driving towards shorter settlement cycles, we have to consider whether or not T+1 is the final destination. If you listen to the likes of Andrew Douglas, who's the chair of the Accelerated Settlement Task Force in the UK, he very much says that T+1 is not the final destination. It's just a stepping stone on the way to the final destination, which is essentially atomic settlement. 10% of world turnover is expected to be in digital assets or tokenized assets by 2030. 10% doesn't sound necessarily like a huge number, but when you consider 10% of world turnover in today's money is $16 trillion. So we're expecting to move $16 trillion of turnover by 2030 using digital assets or tokenized assets. So really significant impact. and something that's going to need the attention of all of the CSDs in the room. And the last one I wanted to mention is Gen AI. 86% of firms are working on Gen AI pilots in 2025. Now, at the start, that's primarily around simple things, less risk things like client onboarding, maybe reconciliations. But as we start to understand the technology better, as it becomes more mature, as we understand the benefits we can reap from it, that will move to higher risk areas. And so we really need to consider how Gen AI can be brought in while remaining resilient, safe place to hold our assets. And of course, there's many other things impacting the CSDs, competition, cross-border, investor CSD models, ever-changing client demands, and that's what we're going to be diving into over the next roughly 60 minutes. And so that really brings me to kind of my first question, my first grouping of questions, which is going to be around what are the forces shaping markets today and over the next few years, and why do they matter for growth and resilience? And Yedil, I will come to you first. One of the things really shaping, I think, is competition, and also the investor CSD model Europe and how that's shifting settlement choice. So how do CSDs respond to that without fragmenting liquidity?
Yeah, thank you, Martin. Let me start with what's changing. These days, for many instruments and securities, settlement no longer happens in the issuer's home CSD. Through links and investor CSD service, participants can choose to settle at their preferred CSD or ICSD. That choice can be healthy, driving better service and lower cost and competition. But it also risks splitting order flows into islands if each venue runs on different data, clocks, and rules. So the question is not which CSD wins, but how do we keep a single pool of liquidity with allowing choice? My answer has 4 parts. One is the one language, the second is one clock, the third is one way to fix breaks, and the last one, thin, non-exclusive links between CSD. When we speak about one language, I mean whatever the chosen settlement venues, trades must be described the same way. That means the same key fields for matching, trades ID, accounts, ISIN, quantity, price, settlement days, and the same plain labels for status and fail reasons. When everyone speaks one language, pre-matching is straightforward. Exceptions fall and settlement location becomes an operational detail, not liquidity driver. Second, one clock. Choice collapses into fragmentation when deadlines differ. We should align cutoff times for sending, pre-matching, funding, and corporate action dates across linked venues. If pre-matching closes at 3 p.m., it should close at 3 p.m. everywhere, relevant to that instrument. When the market keeps time together, investors do not have an arbitrage time zones or processes, and trades meet predictably. The third is one way to fix breaks. Even in T+1, fails will happen. Late funding, recalls, reference mismatches. The cure must be the same across venues. Shared fail reason codes, transparent dashboards that can show where and why breaks occur, and common tools to cover them, auto-boarding, or if needed buy-ins, plus harmonized penalties. If breaks are resolved the same way everywhere, flows don't migrate just to avoid the discipline. And fourth and last, thin non-exclusive links. Cross-border links should be light and standard. Account at the link, synchronized corporate actions and tax processing, and registry reconciliation. They should not replicate parallel trading books, unique calendars, or proprietary formats. And they should not be exclusive. Thin, open links expand access while keeping a single source of truth for who owns the what. That's it.
Thank you. standardization, it sounds like, is going to be a big key there.
Exactly.
Badiuddin, from the ACG perspective, what are the main kind of forces that are really shaping your markets today and over the next few years?
Yeah, thank you very much. The main forces actually, the market is changing, evolving day by day. The main forces are the investor access. One of the most important part is that because the world is changing, the depository function is changing, the capital market function is changing. The main challenge we are facing is the investor access. How we can ease the investor access to the capital market product and services so that they can access the product and services very easily. For example, these are the days of the Bitcoin and the Binance where you can open your account with a blink of an eye within 2 or 3 steps. But here in the case, the account opening process, the onboarding process is a bit lengthy, which is the logical, because here is the proper asset you have to create your asset, you have to drive the dividend income from that. So there are certain requirements, certain regulatory requirements are there for the onboarding processes. So as a CSD, we have to look into it, how we can standardize the process of the onboarding, how we can ease out the process of the onboarding so that the person can access the product and services very easily. For example, in Pakistan, by cognizant of this fact, we have recently introduced a centralized gateway portal, which means that you can open an account one time, you create your profile within 5 to 10 minutes, and that profile can be used for all type of product and services, all type of asset classes available in the market. For example, if you create one-time a profile, that profile with your permission can be shared with the asset manager, can be shared with the brokers, and can also be shared with the insurance product as well. So this is the main core pressure area. This is the main area that we have to look into it. Another area is that how much the operation resiliency we have. Because this is the ever-changing world is there, so we have to assess our system, how our system are coping with the trending and changes in the depository. For example, if we are working for the T+1, we are working for providing the 24/7 accessibility. We are also thinking about the T+0 settlement. So we have to upgrade our system. We have to create a proper resiliency in the system, and cognizant of the fact that we have to be very mindful of the cyber security as well. Because we are in the business of the asset servicing, the main confidence is drive for the investors to have a proper asset servicing, and to have an asset servicing, you should have a proper backup arrangement, proper disaster recovery arrangement, and should have a proper cyber security arrangement as well. Because, these days is a very famous saying that you have to wait for your turn. Okay, everybody has to wait for your turn, because there is any time, any cyber attack can be happen to anybody else. So you have to be very, very acted in a very planned manner. So these are the areas that we have to look into it: the investor access, the system interoperability, and the system access, and the system upgrade required at all the times. Thank you.
Thank you. Yeah, I think that that universal access is going to be a really key point, especially as we talked about earlier with the expected turnover of digital assets, how more people and different investors are wanting to invest into different types of asset classes and new asset classes. And anybody who's ever worked in kind of account opening or onboarding before knows that it's a challenge today. And so when we're having to have different requirements for different asset types and different accounts, it makes it a significant challenge. Bruce, I'll come to you next. From the ACSDA perspective, what are the real kind of driving forces that you're seeing on your side that's causing you guys to have to evolve your offerings over the next few years?
Maybe I could take that and focus on one particular thing, but when you talk about the Americas, you can't talk about all the institutions being equal. In our region, we have the largest depository in the world in DTCC, some of the most mature depositories in the world, CDS in Canada, B3 in Brazil, BMV in Mexico, but we also have some of the smallest CSDs in the world. We also have in many markets duplication of infrastructure. And if I could focus on one particular subject, and that's the area of compensation and critical mass in the business, which I think is a really key issue, and sort of imprinted on me by But my personal history in this industry, I worked for CDS in Canada for 2 decades. I started in this business in 1982, probably before a number of people in this room were born. I remember the days of Fortran cards and physical envelopes exchanging securities for settlement. But during the 1990s, Canada undertook a tremendous evolution in terms of the market by consolidating 3 depositories into a single depository, central bank depository and a regional depository in Canada. And to this day, CDS is reaping, and the Canadian market is reaping the benefits of that because they've concentrated the volume in a single entity, built tremendous scale, and that scale has had a multiplying effect over the years. When I started with CDS back in 1982, the business plan was predicated on 12,600 exchange trades a day. CDS, the Canadian market, frequently does multi-million-dollar transactions a day. That has been fueled, obviously, by technology, but also, I believe, by a consolidation of that volume within a single entity. There's a lot of talk about competition. We in our region have multiple markets with 2 CSDs, typically one owned by the stock exchange and one operated by the central bank. What you end up with is a division of that volume. You've got a duplication of cost base that is probably in the order of 80%. And it raises questions because we have a lot of conversations about the value of competition. And across Europe, there are 17 or 18 depositories in various countries. And some people feel that that competition is good for the market. And it may be good for the product offering, but it is not, in my opinion, I don't think it's even my opinion, in fact, is not good for the cost and efficiency of processing because you have this enormous duplication of the cost base. So one of the things I would put to the audience is that we need to think about competition and how to make our markets as efficient as possible and find a substitute for having competition between 2 entities, but look towards finding ways to concentrate our volume and our liquidity in a way that allows the market to benefit. And I would subject to you that the market itself will look after the demands for the diversity of services that would come from competition between 2 entities, because the reality in markets like Canada, where you operate in a single depository, is by consolidating the business, you drive your unit costs down significantly. In today's numbers, in Canada, they clear and settle a stock exchange trade for less than half a cent per transaction. That makes the viability of transacting business, even in small cap securities, very, very viable in the market. And what has happened as well is the market drives the need for innovation and the demand for new services, new technology that I think a lot of regulators assume only would come from having 2 entities competing against each other. So I think we need to think about it differently in terms of how competition drives our business and what the benefits of consolidation can be.
Thanks, Bruce. I think that's a really interesting point as well around, every time we speak to anyone from the buy-side community, for example, the conversation is always around how significantly they need to reduce their costs. If you take the average TER of a fund, it sits around 80 basis points today. They're needing to reduce that out by about 30 basis points, which is really significant. And I remember having conversations with them in a past life as a custodian and saying, I could give you free services, but it's not going to get you anywhere near to where you need to go. But consolidation and efficiency gains in CSDs is certainly a significant driver of that. And what I really appreciate, Bruce, is that what you said is it's not just reducing costs to make the markets necessarily always cheaper. That's a big part of it, but also to add more innovation, to allow for more innovation. Ekrem, maybe if I come to you next, just on from an AECSD perspective at the moment, around what are the key drivers for change across your markets?
Okay. Thank you so much, and welcome to everyone. And thanks again for all congratulations for the new appointment as WFC chair. Actually, I first can say that to be more resilient and to be more secure for all of us is coming from integrations and collaborations, I think. And we will be all working together to develop our markets, our own markets, and all global markets as well, actually. From Turkish side, as MKK for the CSD business, I can tell that making some things more secure and resilient comes from a lot of dimensions, I think. From traditional point of view, if we look at the CSD business, it's maybe a very complex but basic thing, issuing assets securely. But from if you look at from different dimensions, we are grouping our services in Turkey under 4 different service groups: depository services, data services, corporate governance services, and investor services. From issuer side to investor, actually there are lots of processes to make the markets more secure, actually. We have lots of clients and markets and depository services, not only capital markets. We are also working with product markets, and we are receiving some new responsibilities like for the crypto assets market, even in Turkey, with the new regulations. Actually, it's not a typical issuing, but we will be just registering all the crypto asset service companies. And I can say the data services is also very important for us. We are a CSD and also the trade depository of the market in Turkey. But trade depository responsibility is not a simple thing, I think. As all of us know, data is very valuable thing in the digital age. So also data monetization, data products, and data services are also very important. We are receiving and collecting lots of data from lots of parties and analyzing it and reporting to different bodies. For example, to capital markets authority, banking regulators, or ministries or some other authorities. We are sharing data services with them to analyze the markets, both the local market and global markets as well. And we are producing also some data products for the intermediary financial institutions. It's also very important to manage the risk. As I told, actually, securitization is not a simple thing. The complexity is very high. It depends on where you look at from. The risk management side is also very important. If we don't take it just as safekeeping, we can produce lots of other things from our business, actually. Risk tools, maybe for CSDs, producing risk tools, risk management services is also very important, I think. If we analyze all the data we keep as CSDs, and the third area is corporate governance services, we are producing, also we are developing also corporate governance services like PDP, general meeting solution, and that kind of corporate governance solutions. As I told at the beginning of my speech, actually, securing the market is not only issuing financial assets, end-to-end, actually, from issuer side to investor side. There are lots of processes, products, and services can focus on. And I can tell corporate governance services, actually we offered our capital markets authority, by the way, such a suggestion, to be also, we are CSD of Turkey and Trade Depository of Turkey, and we can have the third role, corporate governance service provider. Because as far as I can see, there's nothing defined in all over the world in such a position. Corporate governance and sustainability is really very important to make lots of things more secure, but there's nothing such a role, corporate governance service provider. So I offered to our capital markets authority to describe such a role, and probably they will be giving that role to MKK CSD. And the fourth one is, of course, the investor services. I can connect the importance of investor services with the new role of for crypto assets, actually. Since we have a solution, e-investor, all investors can see their all assets from different markets, from different financial intermediaries. They can see consolidated data of their assets over e-investor. Of course, they cannot sell or buy some things, but they can use some protection or some investor rights on that application. But it's important to give such a service to all investors, local, global, or any kind of investors. With this role, new regulation assigned us to show all crypto assets ownership to investors, because we will be receiving all the data from crypto asset platforms, custodians. They will be reporting to us, and we will be collecting and consolidating and showing all investors. You know, it's very risky in crypto asset platforms because it's not regulated end to end, and it's risky to see really, if you have some crypto assets, it's really very important to be sure it's really in somewhere under safekeeping. So I can simply summarize our approach, actually, taking from end to end, from issuing side to investor side. There are lots of things to do to make market more resilient. Actually, there are lots of things to say in cross-border integrations, T+1, maybe in the second round I can add some things about them. Thanks.
Thank you, Ekrem. And Mark, Chairman of ECSDA, obviously I know there's a lot going on, SIU, investor CSDs, T+1. Maybe pick one of those as, what's the kind of driving forces, again, shaping the CSDs in your markets?
I mean, I think there are three, possibly four. The first, which actually nobody has mentioned, is the instrumentalization of capital markets generally, but CSDs specifically, in geopolitical conflict. That is very transformative for the CSD industry in Europe, by which I mean sanctions regimes which specifically address the role of capital markets and the delivery of CSD services. That's something that requires operationalization. Resilience is a huge challenge. The second, you correctly mentioned, is SIU, the idea that we can simplify the CSD infrastructure, the market infrastructure generally, in order to achieve a single capital market in Europe and boost the participation of citizens in the capital markets, etc. And that's not a new discussion, but it remains absolutely central to our existence. And the third is digitization and the emergence of new asset classes, particularly private markets. So I'll focus, Martin, on the second and third of those things. So the issue of consolidation of capital markets in Europe is something we've been talking about really since 1987, when a guy called Baron Lamfalussy was asked to form a committee to figure out how you could have a single capital market in Europe. That discussion remains essentially unchanged in its fundament today. So the idea is that you have obviously a single market within the EU. You have a single currency, and that single currency has most, but not all, of the features that you would expect of a national currency. And the idea is, therefore, why can't we have one CSD, why can't we have one stock exchange, one CCP, and deliver this huge reduction in cost? And there's something of a paradox there, because Europe remains very much the preeminent place for intermediating cross-border flows, not just intra-European, which remain very high by contrast to any other region, but also globally. I mean, if a Korean asset manager wishes to invest in Canada, in US debt especially, etc., they're likely to do so through European intermediaries. Partly that's historic, a question of the time zone, the question of the role of London as the world's capital market center, etc. But it's also a question of the high-performing CSDs that Europe has within it. On the other hand, capital market participation by European citizens is extremely low, and most capital inflows into European markets come from US firms, not from European asset managers, and so on and so forth. And the infrastructural costs, as you've rightly said, Martin, are very, very high. Now, partly that's structural. We have a legal quagmire, which makes it very uncertain that if we were to reduce the numbers of infrastructures, that we would achieve cost savings, because you would need to replicate a lot of that cost duplication in order to deal with national specificities, and so on. But the CSDs have been quietly working in the background over those 25 years. We have over 90% of European capital market volume is now concentrated in the hands of 3 CSD groups. We have, through links, interoperability, which means that in principle, any European investor can reach all European markets through a single account. And we have a thing called T2S, which means that we have one single system which enables settlement across that. So the trouble for us is, why does nobody use that facility from a cross-border perspective? We call it the problem of the empty highway. So that's our second core focus at the moment. The third core focus, obviously, digitization and the emergence of new asset classes. And there, I think, what was the great breakthrough which led to the formation of our industry? I mean, our industry is largely, if not, I think exclusively, really a post-war thing. It didn't really exist until the 1970s. My own CSD, Clearstream, was formed in 1970. DTCC a little bit earlier, Euroclear in 1969, and so forth. So what was the big idea? To some extent, it was the invention of the computer, but really the big breakthrough was not technological. It was realizing that we needed to deal not in securities, but in entitlements. And the problem we have with digitization is when we go, and Ekrem, I very much support your point on this, is that we're going a little bit back to saying, it'd be way better to hold the assets itself. And we will need to reinvent the question of how we transform those into entitlements. And so I think backward compatibility, interoperability between emerging digital asset classes, and not thinking of digital assets as something separate from legacy assets, but realizing that these things can make the system more efficient and more resilient. It's not in opposition to, it's in complement with everything that we have built up as an industry over the past 50 or 60 years. So
thank you, Mark.
We can come back to some of those details later on.
Yeah, Bruce, it looks like you've got a remark to that.
Sorry not to hijack this from Abdulla, but Mark said something that reminded me of a conversation that we were having yesterday, and that is Asian investment assets moving to Europe for subsequent investment in the Americas, either in Canada or the United States. With this move towards 24-hour processing and the lower cost base by consolidated infrastructure in the Americas, do you consider it a risk that those funds flowing from Asia to Europe are going to fly over Europe directly to the Americas and exclude you from the process?
Of course. We consider the risk.
Thanks, Bruce. Abdulla, you're a long way away down there, and sorry for coming to you last. Maybe again, if you could just touch on, from your own perspective with AMEDA, what are the kind of driving forces impacting your markets?
Thank you, Martin. The good thing is that I can hear you, but the bad thing is that I can't see you. I think during our discussion with the team, Bruce said something very important, that what CSDs can provide versus how CSDs can provide services or let's say, role in the capital market. And I think this was music to my ears, and I just mentioned that to Bruce as well. In 2022, we were in a meeting with our colleagues from Abu Dhabi Stock Exchange, and then we were trying to come up with a kind of innovative idea. As a matter of fact, we came up with an idea called as a digital market hub or digital exchange hub called Tabadul Hub. The idea started in January, and the main idea was to do cross-border kind of transaction. We know that the most important stakeholder would be in the capital market would be issuers and investors. What issuers expect from the CSDs and also what investors would expect from the CSDs. The idea was being raised to the stakeholders, and we know to have a digital exchange hub up and running, it would take at least a year and a half. The challenge was that we had to go live in 6 months. And luckily, we were live in July 2022. The first collaboration started between Bahrain and ADX. Today, we are talking about 9 markets in a place and 3 years with increase in trading volumes of 125 multipliers. With a market cap of $1 trillion, and we have 600 listed companies, 17 trading members, and 7.6 million investors. We faced few challenges, and of course, number 1 would be technology. Number 2 would be the regulations. And if we go back to 2017 during the CSD in Hong Kong, we heard about the successful story of Stock Connect between Hong Kong and China. And the collaboration is there. It's an effective kind of connectivity, but however, it's still as of today is between 2 markets. We are now 9 markets. We have 9 in the pipelines. We focus first of all on the secondary market, and we know that the primary market is also essential. Last year, we managed to have 3 IPOs within the same structure of the digital exchange hub. And also, we had to look at the post-trade services, and the main 2 areas we have focused on was the asset servicing, i.e. the cash dividend distribution, and also the AGM management. That's it from me, Martin. Go back.
Thank you. We've actually got some really interesting questions coming in from the room, so I think I'm just going to spend a few minutes going through some of these. Some of them are anonymous, and I think we might realize why some of them are anonymous as we go through the questions. Some are not, and some are directed to specific people. First one I have is actually a question to Bruce, and it's, quote, tongue half in cheek. But the question is, I think when you were talking about consolidation of CSDs in Canada, essentially the question is, why stop there? Why can't we consolidate lower down with and have consolidation across the North American markets or beyond?
There's no simple answer to that, and probably in this day and age, the current environment would probably be very difficult to contemplate, but that's a geopolitical discussion. I can say in the late 90s, early 2000s, we did have conversations with the United States about the possibility of consolidating into a single market. Recognize that DTCC is at least 10 times the size of CDS, and there are markets relatively in that proportion as well. I think the short answer is that both markets are very much focused on servicing the stakeholders in their markets, and would probably then, and maybe now, consider it an unnecessary distraction to contemplate consolidation on that level when both organizations have achieved such a significant level of critical mass in terms of their processing, and have established, starting in the mid to late 80s, established the most sophisticated and active cross-border link in the world that processes millions of transactions a month between the 2 markets. So I think we're at a point where there's probably diminishing returns, and both organizations are focused on servicing their relative stakeholders.
Thanks, Bruce. I think you maneuvered yourself well around that question. Thank you. I think you did well on that question. It's not an easy question to answer politically as well, probably, I'm sure. There was a question to Mark as well. Do you believe that large CSDs such as Euroclear, Clearstream, DTCC can drive innovation, or are they too large to be fast?
Well, they certainly can and do. They're certainly not too large to be fast. I mean, if we just look at the record, I'm tempted to sort of sing Clearstream's praises here, but let's look at the role that DTCC has taken in T+1. Let's look at what the tremendous contribution that Euroclear has made to market consolidation in Europe and the elimination of cost, in particular through initiatives such as ECSDA. And it's very difficult for me to accept the proposition that there is, in the CSD industry, a conflict between scale and innovative capacity. Why? Why do I say that? It's because infrastructure, CSDs, therefore, are a scale business. And that's true of individual CSDs and the volume they supply, but it's also true of CSDs as components of larger networks. And therefore, your building scale has to be ultimately the objective of innovation, whether that's building scale for one's own CSD or building scale for the market that one serves, or building scale in a network of markets connected by links and so on and so forth. So I think, though definitely they're not too big to innovate, they do innovate. And when we look at scale digitization, just let me stop at that point and say, when we look at scale digitization in Europe, it's been done by the larger CSDs.
Thank you, Mark. I'm going to come to you here, Yedil. Apologies for this one. It might be an interesting one for you to answer in this room, but one person has asked whether or not we see CSDs as a business in 30 years, or whether or not it will die in a digital era as other intermediaries. Wanted to get your take on where the CSD business will lie in 30 years.
Well, that's a very good question. The CSD business is very traditional settlement and safekeeping securities, and in this digital era we can see many alternative instruments such as stable coins, crypto assets, and digital financial instruments, tokenized instruments. And from my point of view, the CSDs, they should follow the trends. In Kazakhstan now, at this time, we're considering the option to act not only as a traditional CSD, but also as a digital CSD for tokenized securities and for tokenized instruments. And also we're considering an option to build like crypto custody for, firstly for crypto reserve fund of the Republic of Kazakhstan, and then for other institutional investors. However, it is very important from my point of view not to mix this type of activities with each other and in one entity, because CSD, they are already like systematically important financial institutions, and we have these contagion risks. When one shock which comes from one activity, it can transfer to other activity. One way is to separate activities into separate entities and have separate responsibilities, but under one holding. And another way to have a huge amount of capital, which sometimes is difficult because the CSD business is low margin business, so it's difficult to accumulate such kind of capital. So my short answer, CSD should keep follow the trends and should keep implement innovations in this new digital era.
Thank you. Mark, it looks like you're anxious to say something.
Yeah, no, I'd like to come back to a very core point here, which is, this idea of atomic settlement. Let's take a step back and say, what is it that CSDs do? And if we think, what did we replace as an industry? We replaced guys walking around Wall Street and the City of London with briefcases handcuffed to their wrists, And this idea that going directly to the asset and writing ownership into the asset and some kind of trusted process without a trusted operator to regulate those movements it is not about technology, it is about trust. And somebody will need to provide that role. We will need to continue to deal in entitlements, not in the assets themselves, whether that is in the digital era or anything else. Now, it may not be the CSDs who provide that role. If we mess it up, then maybe the trusted intermediary would be somebody else, but there will need to be a trusted intermediary.
Yeah, I think that's such an important point. And also, I think, as a way of also framing, the answer to that question, if we think about the title of the discussion. It's the evolving role of CSDs. Will CSDs look like they do today in 30 years? Probably not. But if CSDs are smart and adapt and evolve and listen to what their participants and the investor community wants, then there'll certainly be a place for a trusted entity to exist. I'm just going to continue with a few other questions we have in here. And feel free to shout out if you'd like to pick one of these up. One of the questions, two of them are kind of linked to a degree, but it's talking about shortening settlement cycles and the impacts they will have, but specifically on the impact on foreign investors' funding of trades and potential market impacts. So maybe Ekrem, if you wanted to take a stab there. So how do you think shorter settlement cycles will impact foreign investors and that kind of cross-border activity that we need of?
Okay, thanks. I can say some things about it. Of course, T+1 is the discussion point for all of us, and we are working on it all countries. In Europe side, the time is definite, and since we are getting more connected with other markets, and as Olaf say always, interconnectivity is really very important for all of us. Omnibus accounts, we are connected to Euroclear and Clearstream, and as Mr. Yedil Medeu told, we have connections with KCSD, Azerbaijan, and some other markets, and we are improving our connectivity with other countries day by day. So it means also that the settlement cycle should be synchronized with all markets, of course, somehow for common financial assets. And T+1 will be, of course, a critical transition for all of us, almost in 2 years after today. And the atomic settlement is maybe the most critical term, as Mark said. We are getting T+1, and some years later we will be discussing T0. So, and in post-trade side, CCP and CSD business getting closer. So somehow we should connect all systems in together somehow to solve all post-trade side together. So it's also related, of course, with digital assets. Tokenization is also another subject to discuss. We are now, in my first round, I told the regulation of crypto assets in Turkey, but actually it's getting also revolving to tokenization of the conventional financial assets. The cryptocurrencies are totally somehow different at the beginning from traditional financial assets, but we are discussing now tokenizing traditional financial assets with the same system. So it means also that we should somehow shorten the settlement cycle like the cryptocurrencies in maybe not close future, but some years later, we should somehow solve this kind of issues and connect all financial bodies, parties all together within our local markets, CCP, CSD, and exchange sites. And also, of course, we are getting more global interconnectivity between countries and regions are also important. Because we are already connecting all markets with each other, and financial assets are getting more, and it will be achievable from other countries as well. And we should develop somehow. We should find solutions somehow to connect, to integrate, to synchronize all of them. We are working for T+1 now, but somehow it's also a very critical issue for all of us to find solutions and to evolve CSD business, the traditional CSD business, but with this kind of new approaches. Thank you so much.
Thank you, Arikan. Couple more questions on here that I just wanted to go through quickly. One of them, we've talked about part of the question in quite a lot of detail already, but the last part of it is kind of the rise in AI and how important that is for participation of the CSDs. Badiuddin, I know, would you be able to maybe talk a little bit about how you view the rise and importance of AI and kind of the role CSDs can play with that?
Yeah, thank you, Martin. You know, obviously, when we are working on the CSDs, when we have traditionally provided the asset servicing to all the market across the country, and then we are talking about the interoperability and the interconnectivity between the two countries. And obviously, if we want to, and then we are in the era of shortening the settlement cycle. We are talking about the T+1. Many countries has already been implemented the T+1, and now they are moving toward T+0. So when we are going to shorten the settlement cycle and we are going to provide the larger population, we are going to provide services to the larger population, AI is the key. If you do not automate your process, if you do not bring efficiency to the operation of the CSD won't work as it should be. You know, the challenges is that because we are competing, as I said earlier, we are competing with the cryptocurrency, we are competing with the tokenization, we are working on the DLT. So all these technical advancements could not be possible without having a proper and efficient AI processing involved in the CSD operation. Traditionally, the CSD are operating with the, have investor account and the sub account with the stockbroker, with the asset managers, and these shares are transferred from one account to another account on the basis of the trade settlement and on the basis of other various transfer which involve the gift of the securities and something like that. All these transactions has happened. It is a past now, and now we have to move forward. And before the move forward, we have to adopt the advanced technologies. We are, these days are the interconnectivity. We are working with the APIs. API is the key these days if you want to interconnect the different organization, because the CSD role has been enhanced over the period of time. CSD is not providing the services to the stock market. They are providing services to different asset classes as well. In Pakistan, we are working for the insurance sector as well by providing the insurance depository for all the life policies issued. These are the humongous database cannot be managed without having a proper AI, because the manual processing do not give you a rise to provide services to different asset classes. So yes, the short answer is that AI is the key. API is the tool that you have to use, and without having these tools, you cannot advance the functionality of the CSDs across the globe. Yes, thank you.
Thank you. Yeah, absolutely.
I would like to add just a small comment. We started a research of implementation of AI in different areas of our activity in KCSD. And what we found out that it's quite expensive. I mean, it's better to automate the process like straightforward without AI in that areas where it can be done. And where it cannot be done, in that areas you can consider implementing AI and Gen AI tools. And one area which we're looking very carefully to implement is compliance.
Mm-hmm. Yeah.
Thank you.
Yeah, thank you. Abdulla, come to you at the end again. Asset servicing is now a primary differentiator for investors. So I guess the question is, how can CSDs help to standardize there? And just as reference, we recently completed a study around asset servicing, and the view very much from the majority of firms is that CSDs should provide a role in providing a golden source of corporate events. And actually, CSD group themselves, over 50% of CSDs themselves agree that it should be the CSDs that help to offer standardization and golden source there.
Thank you, Mark. Our regional GDP is at current state is at $2.3 trillion, and it's also conservatively estimated in 23 at $3 trillion. And again, additional conservative estimation for 2050 at $6 trillion. And this gives us in the region kind of pressure for us as a post-trade service provider to be ready for such a capital raise when it comes into place. And most of the functions under asset servicing have already been taken care of with the technology, but we have seen from the demand part of the services that the dividend distribution when it comes to corporate action, and also the AGM management. So why AGM management? Because based on the decisions taken on the AGM management, then we will be handling the corporate actions. Dividend distribution was one of the most important elements for us due to the fact that the foreign ownership is really open up to 100% in our region, and particularly in the Kingdom of Bahrain. So we had to step and then to either centralize the cash dividend distribution provider or decentralize. So historically, we have seen that there were like kind of accumulative dividend not being collected due to so many factors. So we thought of, taking this responsibility, which is a big responsibility, of the historical unclaimed dividend. It could be 70 years old or 100 years old, and also going forward not to have these dividends accumulated. So we captured all of the cash dividend IBAN bank details. Today, as of today in the region, we have more than 100 nationalities investing in the region. We make sure those investors, be it corporates or retail and individuals, that they receive their cash dividend on the payment date. And it's really very essential because of the overnight interest. On the other hand, due to the fact that 100 nationalities, that they are non-residents as well, they need to make sure that to attend and take decisions on the AGM. So we have also innovated and automated the AGM platform, which is provided on behalf of the shareholders. So we as a CSD took this responsibility. Today I was talking to my colleague Hisham from the Egyptian CSD, and I realized that some of the jurisdictions, they don't take the responsibility as a CSD. It's always provided to a third-party ancillary service provider, but we took as a CSD's responsibility to do that, just to make sure that we have a kind of revenue stream, and on the other hand, we have an efficiency service provided to all of the stakeholders, particularly the issuers and the investors, be it corporates or retail. Back to you, Martin.
Yes, Bruce.
Corporate actions is the gift that just keeps on giving. As long as I've been in this industry, the one common theme that we keep talking about and keep trying to get on top of is corporate actions. But unfortunately, there are forces out there that are forcing us down new paths as they come up with more creativity on things to do. I just wanted to comment on something that Medeu said and pick up on Mark's comment about innovation. And it comes back to my point about scale. I certainly echo Mark's sentiment about innovation in large organizations. Large organizations such as Clearstream, Euroclear, DTCC, the Indian depositories, the Chinese depositories are the lead innovators in our industry. And why is that? They have scale, they have capital, they have human resources. Our business, regardless of your size, has activities that are central to what we need to do, whether, no matter how small you are, you have cybersecurity, your risk management, your audit, you have these core costs that you have to stay on top of and deal with. These larger organizations have the capacity above their core responsibilities to look at other opportunities. Dealing with things like robotics and AI to advance our business, my advice would be we need to look cross-border as to how we can collaborate on the use of these tools without necessarily integrating the organizations, but there are tremendous opportunities for us to collaborate and share information in areas like cybersecurity, AI, and robotics, and handling of corporate actions as another example. And I think we need to do a much better job than we do today. We come to conferences like this, we talk about the way things could be, and next week we'll be back in our office focused on the priorities in our organization. And we need to remind ourselves to lift up our heads and look around and say, who can I collaborate with? Who can I work with for our mutual benefit to give ourselves a level of scale that maybe we don't have in our own organization?
Thanks, Bruce. And honestly, I think that's a really great way to wrap up what I think's been a really interesting discussion. I think we're at time, so firstly, I'd just like to thank everyone here. It's very clear that CSDs are under significant pressure to evolve, but that pressure does create opportunity. As Bruce kind of just mentioned, letting this type of event be a springboard, a catalyst for evolution, a catalyst for discussion and change. As we move through the forum, let's build on that as a foundation and the opportunities that we can all service together. Thank you.
Thanks to the speakers and Mr. Martin Lawrence for your moderation. And now we want to present souvenirs created by local masters from the organizing committee as a memory of the WFC 2025 forum, which is being held in Almaty. Each plate is a unique work of art by the author, born of natural ceramics and lovingly hand-painted especially for you. The works of the twin sisters, the Gabo brand, are laureates and diploma winners of international festivals and competitions. Works of Gabo are in the Castave Museum, in private collections of Kazakhstan, USA, Russia, France, Germany, Italy, Canada, Egypt, the Vatican, as well as in the personal collection of Queen Sofia of Spain and Princess Noor of Jordan. Dear participants, we warmly invite all delegates to join the traditional group photo of WFC. At WFC 2025, this photo will once again capture the spirit of collaboration and community that unites us each year.